CEO at L&T Infotech, now live with us. Good morning. So let's get straight down to it and talk about the fine print and the details of the earning report card. The margins have also surprised this quarter, with a decline of 130 basis points quarter on quarter versus an expectation of the decline being over 200 basis points. That's why I called it a surprise despite the decline. Was it a one-off, maybe lower than expected wage inflation? These days, Nikunj was also saying it's not about valuation but attrition that we really need to focus on.
In our fact sheet, you will find out that I think the wage impact for the quarter, as we estimated, it was around the similar lines. Of course, the currency helped a bit. So I think around 80 to 90 basis point of the margin improvement has come on the back of currency with the rupee depreciation from quarter on quarter. So that was one unplanned benefit, if you will. And, this wage hike cycle is our usual cycle, right? Every year in April, we roll out a wage increases for 80% of our population. And we typically then work on our productivity improvements, our pyramid correction initiatives to recover that wage hike as we go through the quarters. And that's really what we are doing here as well. So there is no other one-off apart from of course, the currency benefit that came in this quarter as compared to last.
Since everyone in the street is, watching out so closely for Ebit margins, I have to ask you this. For the year, 18 to 19%, is that what the market should expect? And if you would talk about the profit after tax as well, the margins, historical band, 14 to 15%?
So the only guidance, as we gave to the street is the margin band of 14 to 15%. And we have stayed within those guardrails for the last 5 years or 5.5 years after listing. So we'll continue to stay in that band. We continue to optimize or decide to pull different levers based on the situation, based on growth. Also, we will continue to be in the leaders quadrant of growth. And as you know, in our business, I think growth is the best margin driver. So we'll continue to focus on that as well. And we will stay in that band of 14 to 15%.
What about overall demand in the context of the recessionary fears which are now there?
So this is, it's likely to be company specific as well, right? So I'll comment on what we're seeing with our client base. So the discussions we've had with our clients over the last one quarter, I think there is definitely a long-term concern that many of them have with respect to the inflationary environment and some industries, the continued supply chain disruptions. But at least as far as the calendar year 22 is concerned, I think all of them are not only staying course with their transformation projects, but some of them are actually wanting to get a lot more done in the remaining part of the year. So we're seeing some short-term pressure to accelerate certain deployments or certain transformation programs. What we are also seeing is that there is no delay in decision making or no projects are being cancelled or postponed. Also, if you look at our revenue mix, 47% of our revenue is banking and financial services, including insurance. And we see that's largely insulated from the inflationary pressures. Interest rate going up in short term actually benefits the financial services customers with the income becoming more robust for them. And we also have energy and utilities, which form the other 11-12% of our revenue, which is also at this point in time, based on the oil prices, is actually continuing to invest significantly. So 58% of our revenue, if you see, is relatively not impacted by the inflationary related problems.
Your deal win momentum has been strong at about $90 million. But are deals coming at better pricing? Because there is intense competition now when it comes to some of the large deals.
So far, the large deal wins that have come in, we haven't seen any specific pricing pressures on that. We continue to see some bit of premiumization possible in certain skill sets and certain service offerings, and rest of the places it remains stable. And we also have a number of large deals which are in the final stages of closing, which we we are sure that we'll close in Q2 as well. So that momentum is strong for us. And in those deals, we're not seeing any aggressive discounting ask or any pricing pressures as far as those deals are concerned.
Thank you for sharing with us your outlook and giving us a view, Mr. Deshpande, on